Hey all, this is a subscribers only stream, right? Now I know for some of you, this is going to be a little bit of a struggle in terms of how you put these things together, right? And I know some people learn at different paces. I know some of you guys have been with us for an awful lot longer. I think it's very hard to visualize how some of these things actually fit together. So what I wanted to do is just to put hopefully a relatively quick video, right? It might run a bit longer than I'd like, but overall, to kind of give the idea as to what it is you're looking for. Right now, some of these things you're never going to be exact. You're never going to be right, all of the time. The things that myself, Paul, some of the other traders, like Peter Hammer, for example. I know Fabs has had a couple of good runs recently. Some of you guys, you kind of get the gist of this, right? Now, when we talk about things like prop firm challenges, trading smaller time frames, making 2 or 3% in a couple of minutes, right? These things are all relatively easy, right? The hard bit of getting to that point is understanding almost what to throw away, right? Now, one of the things that I still find it hard, some of the questions, some of the things that we get when it's talking about, an indicator. I've got 15 indicators on the chart, and it's almost like, why are you using it? What are you using it for? And not me questioning why. It's ask yourself the question, what data are you receiving from that indicator, right? So first things first, if I think logically about an Elliott wave, right? Now this is obviously, say, bigger time frame, right? Now I'm going to draw this out a little bit like this, just to kind of explain the situation. This is how, I'm putting these things together kind of for you guys to understand and hopefully appreciate, how these things actually work, right? So although this is pretty textbook, and there's nothing really in trading that is textbook, what you have to realize, right, is you're going to get things that look a bit like this. You're going to get levels that, not always, but will sometimes kind of marry up or at least overlap in some way, shape, or form, right? This won't always be the case, but you can also get kind of levels down here, right? Now, what we might find, something like this, right? Now, again, it's not always going to be the case, right? It's just kind of an example, right? If you can visualize what actually goes on from the psychology point in terms of an Elliott wave, why these things work, where a Wyckoff structure fits, why the price comes back to a master pattern, all of these things are actually kind of connected, right? And connected in such a way that isn't obvious to most people. In terms of psychology, right? If the price has had a decent build up, then we fall off a cliff. First things first, if you look to the left, you'll probably see a cluster. You'll see something that happened over there, which is why this price decided to turn at this particular point, right? What we're now seeing is the price has pulled back and the price is dropping down, right? So this potentially is some kind of profit taken from the move way down here. Now, obviously, this is something that I've talked about with Bitcoin, why when I was talking reaccumulation, why that rocket call, why the price drops down to 28, why we rally back up and so on and so on. These are all kind of liquidity pockets. If you think in terms of psychology, what's happening kind of at these levels? We've actually got some shorts, short positions happening here. Price drops down a bit further, right? You might get a little wibble in here, look, right? Same again. This becomes your distribution level, right, or redistribution level. Then we start the accumulation phase, right? So all in all, that's pretty straightforward, yeah? Now, from a psychology perspective on an impulsive move, we rally up and we come to more or less the same kind of range that we might have seen over here. Right? Something's happened. This is kind of the auction area, an area of interest. Right? One of the golden rules for Elliott Wave is that number two can't dip below zero. Now again, think logically. What I've just drawn with these boxes, there's liquidity there. Right? So why does number two tend to come back deep? There's the answer. right? So number two is often aggressive. Number two is often chasing extra liquidity to push the price up higher. Okay. Why is number three quite significant? And number three can't be the shortest between the 0, 1, the 2 to 3, the 4 to 5. Well, the answer for this one, right, is again kind of similar to this one. A lot of people would have seen this move and gone, oh, we're making, lower highs as well as lower lows. Let's short the market, right? People that might have actually shorted this down here have got stop losses there. Okay, so at this particular point, we got quite a few interesting topics, right? Then what we have is as the price rallies through, we're going to have potentially new orders also positioned at this, long orders. So now we've got composite man and the big guys, right? We've got the big guys kind of refueling. We've got the move being fueled predominantly by retail, and the move is then ultimately back up, right? Now, the next reason for this, number 4 and number 2, so 3 to 4, 1 to 2, are often opposing moves, right? So if this one's very deep, very aggressive, this one's going to be not so deep and probably more drawn out. You have to think what's happening there, right? We've still got positions to sell because this is now at a premium, right? It's too long to write like that. This is a premium, right? Now, the point being is at that premium, retail are the ones that are losing out because retail are buying this. And then the price drops down, right? It kind of weighs them down, right? Weighs them out. At this particular point, as they start to say, I've had enough, price can rally again. Now, again, from a psychological perspective, why 5 is often truncated or quite small compared to 3, or why it only goes to the 2618 extension. Again, the answer is kind of in here. Right? It's liquidity. So we might dart just above, grab the liquidity, and then we get a big drop again. Another question then is, where's the drop? Where's the liquidity? Right? So the obvious then kind of answers and points, right, is where's the first drop? Boom. Right? This is why when I was saying back in August 2021, why the price would drop down, go to 65k. 65k is where the liquidity sat. Peak just above it, grab all the new buyers, drop down to 40k. The 40k is where the liquidity sits. Right? And then we can drop down further again. Right? Now, if you think of all of this as what I've tried to explain now, and I've just used Bitcoin as kind of the perfect example, let's get rid of all of these. Right. Now, if you think of what's just happened with Bitcoin, right? We've done something like this. We rallied, right? Come back down, we rallied. This was basically 35 to 40k. This one, 19k. This was our 65k. We come down, we had a 28k. We rally back up, take a 69. Right, just above. And then we come straight back into the zone, into this big pocket of liquidity. And then we drop into just under the next big pocket of liquidity. It's not rocket science, yeah? So if you start putting things like the daily bias together, you start looking at things like the Asian sweep, you start putting kind of these building blocks together. When you understand that from an Elliott wave point of view, we do something like this, right? Regardless of what the pattern looks like overall, we're going to have things like this one being, actually let's swap these around. I'll copy that first because it's actually red, right? We've got distribution, distribution, distribution. I'm going to copy that down here. I'm going to change that to green. All right. Now, if you understand, this is, how it works in simple terms, right? It's obviously a bit more complicated than that. If you understand why these moves, why these waves actually happen the way they do, right? It's the first things first. So when you see the price breaking out of a range, next day breaking out, the reason that I talk about the candle story being important is if the candles break up and continue up, you can kind of see the continuation in the trend, right? If the candle comes up and leaves quite a hefty wick pointing to the downside, the chances are we're likely to want to sweep the low of this level. If we don't sweep this level, right, so if the price comes up and then comes back down, the chances are when we start making the change of character here, we're likely to sweep these levels, right, because it's where the liquidity sits. So if you put this into motion, kind of up, down, up, down, up, down, up, down, you can use this on any time frame, right? Now, obviously, if you go in and you look at an Elliott wave move, and you can kind of understand where we are in terms of the bias, right? If I zoom back, I'm going to come back into like bar replay mode, stick something on the screen, right? Now I'm looking at this on a 5-minute time. Let's put this on to, I don't know, 1 hour. Right? What I'm looking at, kind of first things first, right, is I want to not go to the extremes, because obviously if I was looking at this from a daily, weekly, monthly, I'm going to zoom out. I can get a perspective in terms of where I am. What I'm going to do at this point, I'm going to look at this high here and this low there. These are my two kind of extremes that I can currently see on the chart. Right? Inside that range, we got a couple of things. Right? So if I was to measure, let's just say halfway for now, something like this. Right? These are my kind of golden zones, my golden areas, right? We've got this price point here. Change this to be white, for example. We've got another one slightly higher up over here. We've got one underneath there, and we've got one underneath there. Now, if I was trying to use this to trade and only this, I'd be thinking, where the hell is this likely to go? So what you can do is, like I've just done on bar replay mode, go back a week, go back a fortnight, go back a month, right? And try to get an understanding in terms of what we're actually doing. Well, first thing I noticed straight away is we've taken, any form of high. So this one here, right? Low. We've taken the low, right, from this area here. So this was to me some form of sweep. What we've done after the sweep is we've gone up, we've come down, we've gone up and taken a new high. Right? However, if I was to draw this out here to here, what we have at the moment is almost like a very small internal sweep. This internal sweep has basically come out. We've failed to break and clear it, which means the chances are we're still pointing relatively down till we gain some momentum, right? We're under the halfway stage, so bearish momentum is still pretty kind of key. We've got this kind of bigger downtrend, right? So just in summary, my overall bias as we stand right now is we're somewhat bearish, right? So at this particular point, we've come down, we've made a couple of small and this is only 1 hour time frame. What are we looking for? Well, we're looking now for some of these areas to be broken. Right? Now at this particular point, the character has kind of changed to the downside, yeah? Although it was down anyway. We've taken this form of liquidity, but we failed to stay underneath it. We've started to make a shift to the upside. This one now is no longer relevant. This one is still pretty relevant. So if I fast forward a little bit further, what have we done now? For the first time, we've literally gone up and closed with some bullish intent. We've actually closed above the sweep kind of levels. So there's our close. There's the halfway line. This is an interesting kind of position we find ourselves right in now. We haven't taken liquidity to the downside. We've made some kind of momentum to the upside. Look at what we start to do. Where's this level? Right? These things are not by chance. These things are not accidental. Yeah. Just showing you why you could take the momentum to the downside, why then you start to see the change of character to the upside. And it's not just these, there's a lucky guess. Drawn this on the chart, I've shown this, right? I know from experience this is probably a lot for some of you guys to still take in, right? But I think when you understand from an Elliott wave point of view, what I'm actually seeing right now, and I might be completely wrong, because we've obviously made this now as a potential double high again, right? So this is almost a double top type move. Is, are we seeing, A, B, C? Are we seeing some kind of 1, 2, 3, 4, 5, followed by an A, B, and a C? So let's assume this is a 2 and this is a 1. Right. Let's even try putting some extensions on, just kind of out the curiosity. Well, where's our 1618? Oh, what a surprise. Right? So, in the grand scheme of things, right, this is how these things kind of start to piece together, right? So don't try to overcomplicate it. Don't try to, stick 15 indicators on the chart and think you're getting kind of brilliant data. Because the problem that you have with data like this is all the information you're ever going to need is on the chart. Right? When I use something like a stochastic with a false bar, you're only kind of seeing momentum that you can kind of see any which way. If we were to take this swing from the bottom and we were to draw, a box, well, there's quite the big box. There's a relatively decent box. There's some kind of high-end momentum, but because we've got a potential gap there and a gap there, we're going to see volume weighted, probably POC towards the center of this, right? Maybe just to the underside of this U. But in the grand scheme of things, what we're going to see, thin volume up high and a cluster then down low. So if I was to stick, where is it to? If I was to stick this on, right, from the swing low to the current situation, when this loads up, there we go. The information is already in the chart, right? The information's already there. What are we seeing? Volume cluster. What are we seeing? Thin volume. What are we seeing? POC just underneath. Right? All of these things are already there. Didn't need the volume too. Right? I'm taking this as a daily bias without even understanding where we are from an Elliott wave perspective. Right? Where we are trying to see an Elliott wave point of view. If I'm taking this now as my potential, this could be a 1, 2. We're going to probably get some kind of 4 pullback 5, right? If we don't, we want this level, which, like I said, is where the 618 or 1618 is currently sitting, right? We come back down, potential 4 move back down, look. All the way back down. Oh, we've swept liquidity, right? The reality is, without knowing from a bigger Elliott bias, I'm not going to trade like this. Right? I'm not going to look for this in terms of where we go and why we go where we go. What I'm looking for overall is the general idea, the simple idea, right? I talked about why we'd have a pullback, right? Now, obviously, the pullback goes and doesn't really come back, right? It doesn't, ever come back. We've cancelled out whatever move this was, right? So clearly, this wasn't a 1, 2, 3, 4, 5. Right? But the point is, when you're trading in smaller time frames, you can still use the larger Elliott bias. You can still use your Wyckoff distribution, accumulation, and so on, right? But what you're actually looking for is what's going on inside the move. Could we turn around and say, well, we've had some kind of seller's climax, we've had some kind of, move, we've had an AR, yeah, right? You can kind of overcomplicate all of this. What we're actually doing now is we're seeking liquidity. We seek liquidity. Right? We haven't closed below, which means we probably want a couple of stabs at the liquidity, which will end up driving the price up higher. Right? So the point being is when you're trying to use this to your advantage, the next obvious points in terms of liquidity are going to be back at the 50% marker, back at this level, right? This has now created the kind of double top, right? We're going to have this level obviously being very interesting. But until the character changes, and this is why I keep saying it's not just about a level, like this is the character. Until the character changes and kind of confirms, where are we finished now? Then the general idea for me, if we are likely to go on up, we're likely to want to take new liquidity up high, up here. Where the current price is right now, what are we doing? Are we seeking where the price has already been? Which means current target is probably only in and around this region. Right? And then if we get, again, kind of a consolidation around, carry on through, right? This is where the overall target is becoming. The only issue is, right, without looking too far to that, I'm not going to bother on this video, without looking too far to the left, we've got to understand what are we likely to see next. Well, I keep talking about this ascending move. I think before we get up here, or up here, we're going to look at this area, an area of interest. We might dart back up, right, or grind up slowly. Then we get a half decent drop. We could come back for a retest and drop again, right? Now creating kind of a triple bottom. And then I think that becomes the fuel for the bigger move. And I think if we look out probably on the daily time frame, you know, a bigger move, this is only an hour, then realistically, we're likely to see smaller time frames dropping, right, in terms of a stochastic, and the bigger time frames rising. So we're ready for a drop, right? We could go into a false bar depending on what the 15-minute or the smaller 30-minute, you know, what these time frames are looking like. So what 15-minute is. Yeah, we got a false bar on the 15-minute, right? So for me right now, character hasn't said yet we're ready to drop. The 1 hour is kind of ready to drop, right? In the sense of it's already up high, but we got no change of character, right? So anyway, I just wanted to put this together in terms of, you know, why, how. Don't trade it like I've just shown you there, right? The general idea was just to kind of, you know, give you food for thought, right? Kind of give you the core concept. If I was going to look at this, I'd want to understand where I am with my Elliott bias. I want to get a kind of, you know, a daily or weekly kind of picture or summary at least. And then that particular point, you know, once I understand where the liquidity sits, I'd probably go back 2 weeks, 3 weeks, maybe even a month in terms of, are we up? Are we down? Are we down? Are we up? You know, does that kind of fit in with my Elliott bias? And then when you start trading these smaller time frames, it just becomes so much easier. You know, you can pick these levels. You know, I've done this, and you know, like I just said, with this being a 4, and then we dropped all the way back down. You know, all of the levels kind of prior to that, that was an absolute, you know, chance, absolute guess, because I didn't have any prior data to this particular move. Right? If you add another layer, another 2 layers, you know, COT data, for example, you add that Elliott bias, this just kind of it gets more and more refined each step of the way. All right. So anyway, I hope you enjoyed this one. Thanks for watching, guys. I'll see you on the next one.